In today's video, I'm going to be teaching all of you how to make $500 per day trading in the market. I'm going to show you exactly what I look for, exactly when you should enter a trade, when you should exit a trade, and most importantly, why you should do these things, all right? Right after the intro. Alright, y'all, before we begin, again, do not forget to annihilate the like button on your way in. And also don't forget to click on that subscribe button if you are new to the channel, right? So let's get right into it. How to make $500 per day per trade. Well, what I usually look for, again, if you are new to the channel, in this channel, we like to trade chart structures, all right? And there is one structure specifically that I look for every single day that y'all should be looking out for as well. And that structure, I'm going to show it to you through Microsoft, all right? So this is Microsoft. And the structure that I look for, that I took a trade on, which we're going to go over in today's video, and how you can make money from this specific strategy moving forward. The structure is right here. It's on the 3-minute time frame on Microsoft. Again, this is the 14th of last week, all right, March 14th, and the structure is right there. It's in ascending triangle, and it was cooking on that morning. It was trading and forming right here, and eventually broke out for a nice move. Again, the structure is right over here. We have the first run, followed by the retest of that resistance line, followed by another retest until it eventually squeezes out of here. Right now, if you are new to trading and you don't know this structure, if this is brand new to you, I'm going to show you some examples of other ascending triangles through Google. All right, so this is Google. If you go on there and you type ascending triangle pattern, you will see multiple examples of that same structure that I'm showing you right now with Microsoft. Again, this is one right here. Multiple retests before the break. This is kind of an over exaggeration, but I've seen this when a structure is forming over multiple months. Again, we're looking at day trades here. This is more likely to be seen on swing trade or like the 4-hour time frame. But let's scroll down over here. All right, and this is another example. This is looking similar to Microsoft. As you can see, the ascending triangle is right here, and the same concept applies to the bearish side, which is nice as well. All right, so the bearish side, again, in the same picture, we see a descending triangle followed by the breakdown right here. So let's continue to scroll down. This one right here on the right is looking exactly like what we're looking at with Microsoft. Again, the ascending triangle, the morning run, followed by the structure cooking sideways and forming until it eventually pops out of there. And if you keep scrolling, you will see, again, multiple structures, same concept, and you will get a good idea of what to look for moving forward. All right, now let's go back to the trade itself. Okay, so when should you get in? We got past what I look for. Again, this is what I look for. And the time to get in is right here, right at confirmation when it breaks out. We're gonna go onto the monitor tab. All right, and this is the history for Microsoft on that specific day. As you can see, I bought contracts on there. I don't trade the stock. I trade the stock options. And if you don't have Thinkorswim, or if you do have Thinkorswim, those contracts are found over here. Again, these are multiple contracts with different expiration dates. I do have tutorials on how exactly to trade options and how to use Thinkorswim to trade options and the concept behind options, and how to make money from the fluctuations in the value of those specific contracts. All right. So those contracts are right here. And all I did on that specific day was to buy the contract that was at the money on that specific day at 10:18, right when it broke out. I bought 45 contracts for a total of $295 each. The total was $13,275. That was my position size. And after I got in, I waited for exactly, this is an 18-minute trade. All right, it ran for, there wasn't any type of BS consolidation. It was behaving really, really well. The volume was there, the push was there, and it was climbing with the overall market. And when it got to exactly 10:36, when those contracts at about the 260 calls right here, this is the strike price. When those contracts went from out of the money to in the money, and the stock started to consolidate right up here, I sold those contracts for $356 each, which was a total of $16,000. Again, I used a $13,000 position and I turned that into $16,000. A 20% trade, which you can do with $2,000. Again, 20% on $2,000 is exactly $500. If you want to use more capital when you see something that is this clean and that is behaving this well, again, you can do so, but it's important to manage your risk when you do so. It doesn't always behave like that, but when it does, it's very, very profitable. And as we get further in the week, the profit becomes larger. Like this was a 20% trade, but on a Wednesday or Thursday, it could be 50, it could be 100% because of the value of the contracts. All right, so that is the trade, that is the structure that I wanted to show y'all. Now, the last question is, why exactly did I get out? I did explain that the stock was consolidating up here. But the other thing that I like to use, that I like to look at when I'm deciding whether to exit these types of trade, is I like to look at QQQ, the NASDAQ. All right, and the NASDAQ on that specific day, which was right over here. Again, this is the 13th. On that specific day, when the NASDAQ got to 288, it started to roll over. And I figured that 298 was going to be the high of day for that specific day because the volume was kind of fading and was consolidating. And Microsoft already got to its price target already, along with Amazon. I was in Amazon at that specific time on those trades, on that specific day too. So I ended up just getting rid of both of them when QQQ was going sideways like that. All right, so that is exactly how you can make $500 per day per trade. And that is the end of the video. Again, if you found this video helpful, do not forget to annihilate the like button for the YouTube algorithm. As always, helps the channel a lot and it allows more people to get this knowledge as well. Also, if you are new to the channel and you haven't done so already, definitely click on subscribe and click on the notification bell along with all notifications. That way you don't miss out on future uploads. If you'd like to be part of a private Discord community where you can get all of this information in real time as I see them, you can find that as the first link in the description of the video below. If you haven't followed me on social media yet, you can find me at Paul Nguma and at PATTERNOLOGY LAB on Instagram and on Twitter. And lastly, if all of this is brand new to you, if you're interested in getting started in the stock market, there's some basic step-by-step directions in the description of the video below. Step 1 to step 3. It only takes about 10 to 15 minutes for you to have all the tools you need to start trading immediately. You can also get some free stocks after setting up with Webull using the third link in the description of the video below. Once again, ladies and gentlemen, my name is Paul Nguma with PATTERNOLOGY LAB, where we trade patterns and patterns only. And I will see all of you in the next video.